What is up, my bears and bulls? Well, at least I hope you aren't bullish today. This is your friendly neighborhood trader, Joseph Watson, here at the Current of Currencies podcast, and I am here for your daily market update for January 26, 2022. Let's get to it. I'd also like to remind everyone that I am not a financial advisor, nor is anybody who works for me on my platform. We are only giving out paper trading advice, which is hypothetical situations of us buying and selling stocks, equities, and cryptocurrencies. Thank you. Today for news, I'm going to talk a little bit about China and supply chain economics and how inflation ties into it all. And I'm also going to follow up on the Russian news stories that we're hearing coming out of Ukraine. Now, I'm sure you've noticed over the last year and especially the last few months, the price of everything has exploded. It doesn't matter what industry you look at, everything is more expensive. Ironically, the only thing that's not more expensive is prescription drugs, and we've seen a 2.1% decrease in the last year. So I want to talk a lot about macroeconomics, who we get our goods and services from, and who we provide them for, because as traders, we try to capitalize on the movement of these things throughout the market. Now, to start, I'm going to follow up on the Russia situation that we've been talking about the last couple days. So Vladimir Putin has come out with a statement now saying that if there are any interventions, he will be cutting off supplies to America, specifically oil, which is one of the hugest factors that we have in helping supply Europe for their energy. Now, I don't have to explain to you how bad that this could possibly be, because in my opinion, I think we're absolutely going to intervene. It would just be against NATO policy at this point if we didn't help. Now that leaves us in an extremely dangerous situation because we buy oil from Russia, which we provide to Europe, which helps them live their best lives. To put in a very simple way, if Russia were to take away a lot of the trading that they do with the United States, we would have to make up for that trading with other countries that we have trade agreements with, thus basically collapsing the market. This couldn't come at a worse time because unless you're Patrick Starr and live under a rock, you had to have noticed that our own supply chain is crumbling. We have much of our products, whether it's energy or just the things that we use every day, manufactured in China. And because of the sickness that shall not be named, we have gotten less and less over time. This is why you go to supermarkets and see shelves bare. And this is also why last year we saw a massive rush on toilet paper, which I'm sure I don't have to remind you about. Now, that's just a couple things to mention, but I can't tell you that this transcribes to almost every industry that is in existence right now. The supply chain shortages that are not only happening in the US, but in almost every country are unbelievable, and it's not looking like we are going to move in a better direction in 2022. We're seeing a massive amount of companies flood back into America and try to reposture themselves so that the American public does have products for themselves. Now, why do we outsource all of these things to other countries? Well, it's a very simple answer. Because production is cheaper in those countries and we don't want to spend money. But who would have thought that the sickness that shall not be named would happen and that we would not even be able to supply and demand from other countries because of ports being shut down, people not wanting to spread the sickness, and another load of geopolitical issues that really just is different for every country that we trade with. There's so many different reasons of why the supply chain is now breaking down and why we are starting to become more centralized as a country and trying to provide for ourselves. Again, this is not only happening in America, but every other country is dealing with this. So, as traders, what do? How do we capitalize on this? Well, I'll give you one secret right now. I'm really watching wheat. One thing that has seriously been on my mind is, are we going to see another recession? How soon? What will its strength and duration be like? And could we truly potentially be going into a depression like we did 100 years ago. If you have watched my monetary policy course, I talk a lot about recessions and depressions and debt cycles. And we are at a period of time where we are due for another depression. Just like in the 1930s, we really went through the roaring 20s, and now we are on our decline. I am not saying this to scare you. I'm saying this to light a fire under your butt, because if you don't do something, you will end up just like those people in the streets that were burning the clothes on their backs just to stay warm. This is another reason of why I started my channel, because while I know that I won't be able to reach all of you, the people that understand and see the dominoes falling right now, I pray, heed my advice, hedge yourself against this, because it will only help you at the end of the day. I cannot tell you enough that learning how to trade is one of the best skills that you will have in your life, not only in the best of times like we saw in the 2010s and moving forward, but especially in the worst of times when you don't know what to do for money, there's no jobs, and the market and economy is crumbling around you. This is a way to, again, decentralize yourself from your financial system and become your own bank. I promise you, I may sound like a tinfoil hatter right now, but in the next 25 to 50 years, and this might even be towards the end of our lives, God willing that we live towards our 60s and 70s, we need to learn this skill to thrive. Finally, in the upcoming weeks, I'm going to ask a couple of my students to come on the podcast and present testimonials to you guys about what I do for them and also how I've helped them. I really want you guys to understand that I'm not BSing and just talking out of my butt. I am a truly intelligent investor and trader in this space. I not only have very small cap people that have done very well for themselves with the money that they have, but I have people with wealth that I will personally never have in my life, no matter how well I trade, that come to me for advice, analysis, and strategies on a regular basis. I'm also considering creating a subscription service where you can pay $20 to $30 a month and see the stocks, equities, and cryptos that I am trading and the profits that I'm pulling. Again, I'm trying to be as transparent as possible and explain and prove to you guys that I am not talking out of my rear end. If you have any stocks, cryptos, or equities that you want me to cover on this podcast, please leave them in a comment. I'm totally open to doing it. I just like sticking with this roadmap because, again, what I'm looking at has an effect on the outward market substantially. So let's get to the charts. We see a continuation downward on the fear and greed index for the traditional American markets. Now, after what I'm about to show you, this really doesn't surprise me. And again, I am really surprised this isn't dropping at a faster rate. A week ago, we were at 65. 1 day ago, we were at 41. And now we are currently at 37. So the fear is really starting to set in. For the S&P 500, just today, we saw a almost 3% drop from top to bottom. If we look on an hourly chart, exactly what I told you yesterday would play out. And again, from the top to the bottom, without the dead cat bounce reaction rally, we are at about 12.5%. What worries me right now the most is, again, look how spread out these EMA ribbons are. We went right up, double topped, and now at market close, we are on our way to the bottom. Where is the bottom? I'm not 100% sure. This pattern right here is actually called a bearish M pattern, and I expect it to continue to play out when markets open in a few hours. I shoot way too late, by the way, because I actually have a 40-hour job, unfortunately. So, again, with the S&P 500, I am really concerned about what will happen. They said that this was a black swan event. I have been calling for this for about a month and a half, and here we are. So if you are in the S&P or trade the S&P, This is the most concerning thing because we're not even breaking into the higher moving average ribbons, and it just seems like we are going to be in a sustained downtrend for the time being. Dow Jones, same thing played out from top to bottom today. We saw also a 3% movement downwards. Now, we did recover, like I was mentioning just now, from the floor, and I've had this sitting here for quite a while now. I had to take off my drawings because my analysis would probably look terrifying to you guys. From the bottom, you could have pulled a quick 3.5% increase. Again, you would be trying to catch a falling knife, and that's just not a good idea for anyone. A lot of what people are saying this rally was produced by was trading bots. So trading bots are basically algorithms that put in buy, sell mechanics for really higher level traders and especially quantitative investment funds. And again, I don't think that we are at a point where we can call this a reversal, nor do the indicators show me that this is a reversal. We got a ways to go. I'm really going to look at the rest of this week, and we have today and 2 more days after until market close on Friday to see how bad that this can actually get. Do I think that we're going to open tomorrow and continue our upward movement for the Dow Jones and S&P? I don't think it's happening. Again, just look at how it's bouncing off right now. Just my opinion. I'm not a financial advisor. This is not financial advice. But so I forgot to cover this yesterday, but inflation continues to rise as the Fed is now calling for another interest rate hike, and that will be, I believe, 3 or 4, which this is just completely mind-blowing to me because every time the Fed has done this and they think it's been good, we've ended up in a recession. And I have some charts I'm looking at right now of previous recessions, and the same indicators that pop up on recession charts are happening right now. Sorry, let me turn some stuff off. We are still trading upwards in this ascending channel. We broke our EMA ribbon, so this is now a line of support, and I believe, again, we are going to continue this movement upward. Same thing with the Chinese yuan. Moving on to the crypto fear and greed index, we actually didn't do too horribly, especially compared to the traditional American markets today. We are now seeing an upward movement from 12 to 23, but we are still in extreme fear, as you can see. Our total market cap is kind of trading sideways at this point. Sorry, I know my charts probably look wild to someone new. So here's our floor at about 1.509 trillion, and we are now seeing let's move to the hour. This is a little worrying because if anybody knows about pattern trading, this is what I'm looking at right now. This is called an ascending wedge. And typically what will happen is in an ascending wedge, you will break up in this range, and a high majority amount of time we will break down. Now, unless we can get over this bar, and this is extremely roughly drawn, we then have to deal with the 200-day moving average, which, again, one of the strongest indicators for a bear market. Just look at like what we saw around here, and this was an extremely micro version of, what we could see if this happens all over again. I'm not a moon boy. I don't think that we have the market strength, nor do I think that the other world markets are going to give us the support that we need to continue to move forward in this. Now, you got people like BitBoy that are screaming buy the dip. He was screaming buy the dip at 60, 55, 50, 45, 40. You get the point. And again, that probably, for the people that just watch him and trade, and I'm sure that it's a lot more people than I'd like to even believe, it's wrecking people. And yes, you can hodl, and maybe in another, unless this super cycle miraculously continues, we just aren't going to be realizing profits at this point, unless you're a trader, which is why I'm trying to get you guys to learn how to trade. And I just will never take I'm on the anti-hodling initiative, anti-moon boy initiative so hard right now. So let's look at the total market cap too, because we have some very interesting things happening in it. Just as I said, for the last 2 days, we have tapped our major support box and come back to basically make a little bit of a rise. And when we did that, we went up about we're up about 12.5% right now, which is pretty good. And you can't trade this, but you can trade altcoins for sure. Bitcoin has definitely not done as bad as the traditional markets. And like, you guys are probably looking at this chart right now, like, how do you even read this? Well, I trade on a lot shorter time scales, so when you break it down, it looks a lot more compact and readable. Let me just show you a little bit. I'm just looking at trends with these lines. That's about it. But to turn off my indicators, make it a little easier for you guys, we saw this huge dump this morning. We bottomed out at about 33,000, but we saw a great reaction rally, and I believe that this was the dead cat bounce for Bitcoin. And from that point, we have seen about a 13.12% increase. Now, am I bullish on Bitcoin right now? I'm not 100% sure about that. I'm very happy that on the, this is the 30-minute. On the 1 hour, we have started to see a ribbon flip, but the biggest concern that I have now is the 200-day moving average, and if we will ping pong off this extremely high RSI, we're starting to get signals on our TSI. You know, there's very, very, I will go as far as saying cataclysmic indicators that, again, we are going to continue this downtrend. Now, if we look, and I'm just going to throw on my drawings real quick because this is probably the most important part over everything. These green boxes that you see right here are, this is now, this should be red, but all of this is resistance now. Anything that this price of 37,320 is under is now resistance. So we have a massive resistance cloud here, massive resistance cloud at 50 to 52, 44 to 46.5, if I remember correctly, and one as well at 40 to 42,000. So even if we were to move up the 9% extra until we hit our next massive resistance cloud, we have the 200-day moving average coming down. So, you know, there's a lot of resistance in the crypto market moving forward. We'll just have to watch for this one for sure. Moving on to Ethereum, it was typically the same case. I'm going to turn off this Ichimoku cloud. We are consolidating right around the 2450 area, and we also saw a low of about 2200 for Ethereum today, and I can't tell you how wild that is to me. We are getting at prices where retail higher end retail investors can buy an Ethereum node if they wanted to and they were doing well. But the most concerning thing is we are about to see a death cross on the 1 day. Looking at the 1 hour, we are trading sideways. Again, our EMA ribbon is starting to flip, but if we do continue to find this as support and move upward, we are just going to be met with the 200-day moving average. And again, I am very concerned because the markets in general are just in a very, very depressed state. How much lower can we go, I think, is everybody's question. And I'm not sure. This is why I'm not a long-term holder or hodler. I trade day by day. I just think it is the smartest thing to do right now. And that's all I can really say about that. So I hope that I've given you some insight, and I hope that you are making good trades and profiting on this. I hope I've given you some insight of what to look into, that you can profit on this. If you enjoyed my video, like, share, subscribe, tick the little bell on YouTube so that you can get all of my updates as soon as they come out. It would be a grand help for me, and I really want to save everybody and make money for everybody as much as possible. This is your friendly neighborhood trader, Joseph Watson, at the Current of Currencies podcast, and I'm about to catch a wave out.